One Paul here. Today I'm going to be going over a strategy with the stock market. Now this strategy this strategy is more focused on longer trades. You could do this for longer trades, but you can also use this for intraday trades as well. But from what I see in the charts, it works more by using the strategy, and it helps benefit you more by doing longer trades by focusing on the day chart and the 6 hour, and it really helps you find a lot of those key moments of when to enter your trades for bigger results. So I'm going to show you how to do this formula. If you've seen the last couple of videos I've done, this is similar, but what we're going to be doing is we're going to be plugging in the moving averages of 50, 100, and 200, and we're also going to be adding the difference of two moving averages, which is another indicator, and we're going to be looking at two other moving averages with the visuals of that indicator, and then we're going to be looking at longer time frames, and we'll look at some key moments to get in for to find for stocks, for option trading with calls and puts. Okay, so to set the strategy up, you're going to need two indicators. You're going to need to get to your 3 smooth moving averages. So go to 3 smooth moving averages, and you want to change your settings to 50, 100, and 200, and make sure the colors are all bright and stand out. And we want to be focusing on a stock, and you want to be focusing on a longer time frame. We'll be looking at the day chart of SPY or SPX, and the next thing you want to get to your EMA difference here. You go to difference of two moving averages, and you want to put in 13 and 24, and those are the only settings you need. I also have no, this is optional, but I have also simple Fibonacci, which basically it automatically draws the Fibonacci for you. So I turn that one on and off, but that's optional. So what you want to do when you're doing options with SPY here is first you want to identify the last moment when the 50, 100, and 200 cross. With SPY, it has been bullish since around here's when it all crossed. So since May 22nd, SPY's been going up. So what you want to do is you want to find the overall direction. So we know that the overall direction is up. So because we know the overall direction is up, that's the direction that we're going to be focusing on. Now, even though that it is going up, there are pullbacks here and there. But for the most part, the SPY's going up. So the direction that we want to focus on is up. So the next thing we want to do, since we know that the direction is up, we want to be focusing on the difference of two moving averages. Now you can do this in whatever time frame you want, but the longer you go out into the time frames, the better results can be. So we're going to be looking at SPY real quickly on the day here, and we're going to look at some moments to actually get in some trades if you look at this on the day. Now if since we know that the trend is going up, if we come in, what you want to look for is you want to look for pullbacks, and that's basically when it dips below the zero line, which is right about here. So you'll want to enter your position basically if it touches the 50 moving average. If it touches the 50 moving average, or it dips below the zero line, this is a good moment to get into trade. You want to look for it getting weaker a little bit, and ride it out basically. So that's the first thing you want to look for. If you don't see it dip below the zero line, you want to enter your trade. It goes into a dark green, and then it changes into a light green. So if it goes from a dark green to a light green, that's also another moment to actually get in for a trade if you're looking at this on a longer time frame. So we'll look at a couple examples here on bullish scenarios on the day, and we'll look at some other time frames as well. So if we notice right here, we notice that it goes dark green, and then we go and we shift to a light green. So this would be where you would enter your trade, is right about here, and you would ride this out for about a week. Right here, here's 7 days. Now this is a $11 difference in price, which means you would have made, if you did one contract, you would have made about $1,108 for that trade. The next time that happened was right here. You see it go dark green, and then you see the light green right about here. So this is when you would enter your trade, and you would enter right about here, and you would ride it out for about a week. We could do about a week contract for this. And this is, in 7 days, this is a $2,190 move with one contract. Now you could scale this up. One contract you make about $2,000. So if you did, now if this is 10 contracts, this is about $21,000. So let's go to the next time that happened. Now you could actually get in. I would prefer getting in, because you see it dipping below the zero line right here. So I would get in probably around here for the trade, and it's also touching the 50. So if you ride this one out, let's just do 7 days. Right about here. Here's 7 days right here. And this is a $28 difference in price, which means with one contract you made about $2,823. If you scaled it up to 10 contracts, this would be about $28,000. So you can scale up real easy, but the only downside to doing it on the day is you have to wait for the signal. So you can't. I prefer doing it on the day chart, but you can go to smaller time frames, and that's what we'll check out in a couple minutes. So we also see it go to light green right about here. And if you come in right about here, ride this one out for, let's just say, 7 days. This is $1,240 for one contract. This would be about $12,000 for 10 contracts. And you could scale it up accordingly. So if you come right here, right about here is another one right here. If you rode this one out for 7 days, it's right about, see, 7 days is right here. This is a $1,425 move with one contract. With 10 contracts, you'll be looking at about $14,000 for that trade. So we'll look at a couple more on the day, then we'll go to some smaller time frames. So we see it happen. We see it switch. Now it goes below the zero line right about here. So you can enter right about here. If you rode this out for 7 days, about 7 days. This is about $1,398 for one contract. If you did 10 contracts, that would be about $13,000. And we'll look at a couple more. These are a bit more choppy. So you want to get in. You could find moments like right here. You can come in here, ride this one out for, let's say, 7 days. And this one is about $1,478 with one contract. It's about $14,000 with 10 contracts. So real quickly here, we're going to go down to a smaller time frame. Let's go look at our 6 hour. And basically, you just want to do the same thing, because we know that looking at the day, the overall trend is up. So we want to be focusing on the same thing. We want to be just focusing on dips to below the zero line, and we want to see the moments where it turns into a light green. So now, if this was a bearish scenario with SPY, so you'd be doing the opposite. So you'd be looking for, we'll find one if we find one, but basically you want to be doing the opposite. You want to be looking for the the EMA difference to be at the top here and then coming down like so. So you're just doing the opposite if it's in a bearish scenario. But let's real quickly look. Let's look at this right here. We see it dip below the zero line right about here. So this would have been a good move to enter right about here. Right about here if you enter the trade and you wrote it out. And this is about 4 days. You made about almost $3,000 there. You see it happen. You see it cross right here with the candles. The EMA difference right here. So we wrote this one out. This one took 6 days. This is about $1,643 with one contract. It's about $16,000 for 10 contractors. So, and you see another moment right here. You see it dipping below the zero line, so this would be a pretty good moment to get in if you get in right about here. And if you roll this out, let's just do 7 days. Right about here. So this is $1,846 for one contract. And then you see it again happen around right here. You see it below the zero line. So any moment right about here would have been a good moment to get in for the trade. If you rode this one out and rode it out, this is 7 days right here. This is about $2,558 for one contract. It's about $25,000 if you did 10 contracts. So let's real quickly go to a smaller time frame. This is more intraday. This is more for this is more finding if you want to get paid daily here. But the smaller you go in the time frame, the more you got to be alert. You could enter into sideways actions and things like that. So we know the trend is still up. So you see it's down here below the zero line. You could have come in right about here, and you could have rode it out right about here. If you rode this out for let's do 7 days right here. This is 7 days right about here, and this is about $1,118 for one contract. This is $11,000 if you did 10 contracts. So you just find these moments, and it's best to find it when it dips below the zero line if you're looking for a bullish scenario. So if you enter right about here, wrote it out, this is 2 days worth and about $1,720 with one contract. And if you did 10 contracts, that'd be about $17,000. So by focusing on the longer time frames, the day chart, when doing options, the disadvantage of doing the day chart is you're going to have to wait a little bit longer for those results. But if you set it up with the 50, the 100, and the 200, and you look at the difference of two moving averages, it'll show you the moments to actually enter your trade for longer trades. You can also use this for the shorter time frames. I don't personally, when doing options with this strategy, I do not go lower than the hour. If you do it lower than the hour, you might find more of the sideways consolidation periods, and the strategy is best used for longer time frames, in my opinion. But you can do this with SPY. You can do this with any stock that's out there in the market. You can also use this to find good moments of when it's going to start going up. So you don't necessarily have to use this for options. You can use this for when an asset is just going to start going up. So by looking at the day chart or the 6 hour. But anyway, if you guys like this video, make sure you hit the like button, hit the subscribe button. I'll see you guys for future videos.